So finally, latest monetary policy statement is out, and after a lot of tantrums, Reserve Bank of India has convened its monetary policy committee's meeting, and we have the latest statement. So we will see what has been all said in this statement and what new policies or innovations have been made. Before that, let us take one question, and the question is very simple. Question is, the monetary policy framework was instituted in the year, and the options are 2013, 2014, 2015, 2016 or 17. So if you are watching this video on a platform, you can mark your answer and check whether you are knowing this particular fact or not. And in next slide we will see what is the answer to this particular question. So let us have some important facts regarding this particular committee's meeting and monetary policy framework. So this was 25th meeting of the monetary policy under new monetary policy framework, which was instituted in the year 2016. So our question was, the monetary policy framework was instituted in the year, and the answer to this is 2016, right? So that was, these two were very important facts. This is very obscure fact to remember, but it may happen that RBI or any other examination body will ask you such a simple question. Another important, rather this is most important fact you must remember, and there can be one more question around this particular fact. So when was monetary policy framework was introduced? So it was in June 2016. Now another interesting fact about this particular monetary policy committee's meeting and monetary policy statement is that this is the first meeting after the appointment of 3 new members. So earlier there were members, those were Pami Dua, Ravindra Dholkia, and another member was Chetan Ghate. So they were appointed in 2016 for the tenure of 4 years, and their tenure has ended now. So all these are external members in the monetary policy committee. So now these 3 will be replaced with these another 3, that is Dr. Ashima Goel, Professor Jayant Verma, and Dr. Shank. So before we jump into the details of monetary policy, we will first see some important facts regarding these 3 members, and then we will see what are the pronouncements have been made in monetary policy statement. So first and foremost, this is Dr. Ashima Goel, and earlier Dr. Ashima Goel was on the Economic Advisory Committee to the Prime Minister. So after her appointment on Monetary Policy Committee, she now has resigned. She is a professor at the Indira Gandhi Institute of Development Research, and most importantly, her area of expertise is macroeconomics. So this is one important fact. Another member is Professor Jayant Verma. So Professor Jayant Verma is he's professor at IIM Ahmedabad, and his area of expertise is finance and accounting. Third member is Shashank Bide, and Shashank Bide is senior advisor at National Council of Applied Economic and Research. National Council for Applied Economics and Research. So this is very important body. So we often come to know about this body and her work and various contributions. Fine. And most importantly, Shashank Bide's area of expertise is agricultural economics. So this is very important fact, because for last so many days a lot of suggestions were made to the government that there should be one member who is expert in agricultural economics, who is a member of Monetary Policy Committee. And finally government has adhered to all those suggestions, and we have one member who comes from agricultural economics. So that is why this area of expertise and some details about these members was important. So I hope you have understood this particular part. Now we will move to the highlights from the monetary policy statement. So first and foremost thing is policy repo rate is unchanged and it is at 4%, right? So as policy repo rate remains unchanged, so does the marginal standing facility and bank rate, which is at 4.25, and also the reverse repo rate, which is at 3.35. So please keep remember these particular numbers. These are most important. Another important fact is the stance of monetary policy is now again accommodative. So since last so many policy pronouncement, the stance remains accommodative, and with accommodative stance, RBI means that it will consider that economy needs an expansion, right? So this accommodative stance would be continued as long as it is necessary, then certainly during the current financial year and also the next year. So these were the major highlights of the monetary policy statement. Now we will see this monetary policy in a finer detail. So on the front of economic growth, what have been the observations made and forecast has been suggested by RBI, we will see that. So what RBI sees that during Q4 of 2021, inflation would ease, right? So currently there are issues related to inflation, and that is why also RBI has held back on reducing the policy repo rates further, and that is why it remains unchanged. Fine. So after Q4, there may be some chances that it will reduce further, but till Q4 it will remain so. Another important observation is regarding purchasing managers index, that is in manufacturing. So it has hit the highest mark of 56.8, and this is highest since 2012. So in the month of September 2020, purchasing managers index for manufacturing has hit 56.8. So in case of PMI, anything beyond 50, if it is the number is plus 50, it represents expansion, and if it is below 50, it represents contraction. So keep this particular part in mind, because in case of manufacturing it was beyond 50, and that reflected expansion. But in case of services, so services PMI remains at 49.8, so that is something which is not a good sign, and it is like this particular area is not expanding. Fine. Three important areas or sectors Reserve Bank of India has found out in our economy. So it has classified it as resilient sectors, strike firm, and slog over sectors. Right? So in case of resilient sectors, so these particular resilient sectors have remained unaffected, or those who are not that affected with the impact of COVID. So COVID impact was not that pronounced as in the case of other sectors. So these sectors are called as resilient sectors, and these sectors are namely agriculture and allied sectors, fast moving consumer goods, that is FMCG, vehicles. Very surprisingly, you might have seen that in the month of September there are many companies who have exceeded their year-on-year sales, right, to the tune of even 30%. So that is one major element. Another important thing is tractor. So this is again obvious because agri hasn't been affected, so largely it remains in the consonance with the agricultural activities. And finally the evergreen sector, that is pharma and electricity. So these have been the resilient sectors. There are some sectors which have been called as strike firm sectors, so they were not actually named in the monetary policy statement. So the only thing which was said about it is that they are normalizing gradually. So these sectors will also come to normalcy very soon, as it is being expected in the monetary policy statement, right? And then finally there are certainly obviously some sectors which would slog over, such as tourism and again hospitality sectors. So these will have their own problems before everything gets back to normal. So these were the major observations regarding various economic activities. Another important fact which this statement noted is that there has been a modest recovery in the high frequency indicators. So there is a term called high frequency indicator. So it reflects whatever economic activity which is being carried out in current time, and what could be the projections depending on that. So we get to assess what kind of economic activity is going on in our economy at the moment. So in high frequency indicators, the kind of high frequency indicators are like these tractor sales, vehicle sales, then again we track unemployment and employment part to gauge the situation. So that was all about high frequency indicators, and they are now showing some modest recovery. So finally, after having made all these observations, Reserve Bank of India has come up with a GDP forecast, and GDP forecast, unsurprisingly, it is again very strong decline, that is of 9.5%. so it will be a contraction of 9.5% in the year 2020 and 2021. Fine, so this particular number is very important. So that was about the economic growth part, which was pronounced by Reserve Bank of India. So let us see what was next. So next is regarding the liquidity situation in the financial market. So the first and foremost motto of Reserve Bank of India in current pandemic situation is to ensure that there is enough liquidity in the system, and that is why various measures we have seen that continuously Reserve Bank of India has taken, such as targeted long-term repo operations and some ways and issues related to ways and means advances. So all these efforts were made by Reserve Bank of India, and a lot of liquidity was pumped into the system. So that is the major aim of RBI. Another important part which was mentioned in this particular policy statement, that weighted average cost of government borrowing is at the lowest in last 16 years. So it is now at 5.8%. So a few months ago RBI had made some changes, rather last year RBI had made changes towards some ways and means advances and other government borrowing programs, and it was said that this would help to reduce the cost of government borrowing, and finally we have something like that. So again there will come details on this particular part, and we will see that also. So this particular part will not be going into far many details. Right now, another important part of this liquidity is ways and means advances for center for second half of this financial year is now at 1.25 lakh crores. So earlier in normal years it used to be 35,000 crores. So this is between October to Feb. So for October to Feb, ways and means advances limit used to be 35,000 crores, and in current situation it has been pegged at 1.25 lakh crore. In case of H1, it is somewhere normally 75k crores in normal condition, and if you have noticed that in this particular year it was some 2 lakh crore or so. So I'm not exactly sure about this particular number, but I remember that it was somewhere around 2 lakh crore. Fine. Similarly for states, in H1 there was increase of 60% in ways and means advances, and now this has been extended to H2 also, that is to March 2021. Fine. So this was about ways and means advances, these two particular points. And finally now Reserve Bank of India has decided to increase open market operations size from 10,000 crore to 20,000 crore. So this is another important point. So all these efforts are concentrated towards ensuring that there is enough liquidity in the system. Fine. Now let us see some additional measures have been taken by Reserve Bank of India, and the additional measures are there is introduction of on tap targeted long term repo operations. So always these repo operations are like they are held in auctions on a periodic basis, but now Reserve Bank of India has introduced on tap TLTROs, targeted long terms repo operations. There would be a tenor of 3 years, and total amount would be 1 lakh crore, and this would be open till 31st March 2021. So this is one important part. Another important part is there would be open market operations in state development loans. So this is most important measure which has been taken by Reserve Bank of India. So now with the help of open market operations, what Reserve Bank of India aims is at improving liquidity, or there would be like secondary market for state development loans. So this is one major change, and for the first time there would be such open market operations for state development loans. Now let us move towards some regulatory measures. So in case of regulatory measures, there have been some important changes in case of retail loans which are extended by banks. So in current situation, if a bank is to extend a loan of up to 5 crores, then the risk weight for that particular loan is 75%, right? So this risk weight is a particular risk factor which is associated with the extended loan. So for different loans there is different risk factor. So for example, if you go for a consumer loan, risk factor would be 100%. In case of credit cards, this risk factor would be 125%, right? So according to this risk factor, what risk weights, what bank has to do, bank has to like put aside certain capital depending on this particular risk factor. So for a risk weight of 75%, loan earlier could be extended was that of rupees 5 crore only, and now this can be 7.5 crore. So this is one major change which has been brought in by RBI. Another important change which is rationalization of risk weights and linking of this risk weight to loan to value ratio for all new home loans till March 2020. So again, there is something called loan to value ratio. So suppose that you are having some home loan, so some home with the price of which is 1 crore rupees, and you borrow from bank rupees 50 crore, right? So your loan to value ratio becomes 50%, and according to this 50% loan to value ratio, there would be certain risk associated with it. So there are n number of factors. We are currently not going into that particular detail. The only thing you need to remember is that there has been certain rationalization regarding risk weight, and it has now been linked to loan to value ratio for new home loans till March 2022. Okay, fine. So these are two important regulatory measures. Now let us have one question on state development loans, as we have seen that there has been major change which is introduced for state development loans. So we will have some question on it. So question is, which of the following is incorrect regarding state development loans? So SDLs are short-term securities. Another statement is SDLs are auctioned by Reserve Bank of India. And third statement is these are not eligible for SLR and LAF of Reserve Bank of India. A or C or A or B. You have to pick amongst these. If you are again watching on our platform, just mark your answer and check it whether it is right or wrong. Fine. So the answer to this particular question is D, that is A and C are incorrect, right? So state development loans are not short-term securities, these are dated securities, or these are long-term securities. Fine. Another important point is these are auctioned by Reserve Bank of India. So certainly Reserve Bank of India, or obviously Reserve Bank of India manages loans of state government. So finally there will be anyway auctioned by RBI only. And most importantly, SDLs are eligible for SLR and liquidity adjustment facility, right? So this is important, and that is why these two are A and C are wrong statement. So that was the answer to this simple question. Let us move ahead. Now see one more additional measure which has been brought in by RBI, and again this can become a potential questions, and this change is review of co-origination model. So let us see what is this co-origination model. So in co-origination, or alternately you can call it as co-lending. So this was introduced in 2018 by RBI, and what used to be like, there would be some bank, it would collaborate with NBFC, and both together would extend a loan, right? So in this particular case, they would share both risk and they would get rewarded both. So that was a co-lending model which was introduced in 2018 by Reserve Bank of India. Primarily it was available to non-banking financial companies, that too non-deposit taking and systematically important. So this particular class of NBFCs was eligible to take part in this co-origination model, but now all NBFCs including housing finance companies now will be allowed to collaborate with banks to undertake priority sector lending. So ultimately the loans which were extended under this particular framework was to priority sector. Fine. So we already have seen that this was introduced in 2018, and this will ultimately help in attaining banks their priority sector lending targets. So this was about co-lending model. And finally there have been certain changes in payment and settlement system. So these are this is one most significant, and this is like not that significant a change. So there would be like RTGS on 24/7 basis, so 24/7 by 365 basis from December 2019. So earlier NEFT was made 24/7 in December 2019, and now finally RTGS would be available on 24/7 basis. Fine. So this is one major change. And another change which has been introduced is perpetual validity for certificate of authorization for payment system operators. So whatever payment system operators we see, such as say Visa, MasterCard, and many other banks are also they also act as payment system operators. So what they have to do is like they get say a validity license of 5 years, and they have to renew this particular part. Now what RBI has introduced, that now there would be no need for this 5 years renewal. So it would continue for perpetual validity subject to certain conditions. So these all were new introductions in monetary policy statement, and whatever pronouncements have been made in monetary policy statement regarding repo rate and MSF policy stance and economic growth. So we have covered all the part. So I hope this was helpful to you. If you have liked this video, kindly like, share and subscribe. Thank you.